What is going on, guys? This is going to be a fully uncut video showcasing the entire strategy I use to make $10,000 a day. Remember, trading is not linear. My profits vary from month to month, and it is very difficult to learn, especially on your own. But if you stick with it, the freedom you get makes it totally worth it. Let's go ahead and get started, guys. So the first thing you want to know is that I only trade the ES and the NQ futures, meaning I only trade the S&P and QQQ, not because they're the best, just because I trade the New York Open and they have the most volume, the most volatility, and they're simple. You need to master and know like the back of your hand, 2 to 3 instruments. That is it. You don't need anything else. The first thing I'm doing is paying attention to market structure. I like to go with the overall trend. So I'll go ahead and switch my time frame to the 4-hour chart right here. The larger term time frame is always your friend. So now that we have identified, right, it's pretty simple to do. The larger term time frame is significantly to the upside, and we are very, very bullish. Now that we know that, what we have to do is identify key levels where we want to take our trades and take our position. So for that, I will use supply and demand. I have other videos on my channel teaching you how to draw these levels, but it's pretty simple, right? We're just looking for a little bit of consolidation before an explosive move up, right? Or before an explosive move down. Right, here is one. This one's perfect for the move down. And you can already tell how well these levels get respect. Now, I use demand to go long and supply to go short. So we don't want to go short, remember, because the 4-hour trend is to the upside. But now that we have identified these two little bit of a demand zones, we're going to look to take longs off of and the 4-hour structure to the upside. I'll go ahead and zoom down to the 30-minute time frame structure. Because I know the 4-hour structure is to the upside, I'm looking for an inverse on the 30-minute chart, meaning I'm looking for price to start selling off into a bearish trend into my demand zones to go long. For example, like this play right here, or this one right here that could be about to happen. Now, something big I use to dictate my bias is volume by price analysis. Now, for this, you can use a volume profile, the volume bars, a footprint chart, whatever it is you want to use. But what I want to see is volume dying out before I get in if I'm going for a reversal. Meaning, if I want to get in long at this demand, I want to see there be no volume, nobody trading down here, so that I know price will then have to push itself up for me to get into a trade. So as price is approaching into this demand zone, I'm looking for volume to decrease so it confirms my bias. Now that we have this down, let's zoom into the 5-minute chart, which is where I take my executions. Now, I only trade the New York Open, so I wouldn't be messing around with anything happening here. Let's zoom into this long we took right here. Now, look at the volume, right? We are seeing volume die out as we are approaching into our demand zone, and we're getting great consolidation. Now that everything else aligns, right? 4-hour structures to the upside. We have a 30-minute structure down into our demand level. We push down, the volume is decreasing, and now we're consolidating. So for my entry, I will use anything from order flow analysis to liquidity. So in this instance right here, I use order flow in the tape and level 2 reading to be able to take a position long. I use a quick example. I know this might look super crazy and confusing, but trust me, it is really simple. All I'm showing you right here is what you are already seeing right here on a candlestick chart, but now we see all the volume and all the orders coming into the market. And again, guys, if you want a free in-depth course on literally everything I'm talking about here, how to get your stuff set up, I'll link it down in the comments below. I'll also put it in the description. But something I used for this trade was an order flow imbalance, but it was also this 1.3 negative delta seller not moving price down, which caused this reaction to the upside. Now, when it comes to stop loss, if I get in long here, I like to put my stop loss on invalidation, meaning if we break down below and make another low, I do not expect my thesis to be correct and price to still jump up. So I'll put my stop loss right below the consolidation low. Now, for my take profit, I use something called VWAP, volume weighted average profile. Now, I have a couple different settings that I actually will use. I will go ahead and get rid of the upper and lower band, and I'll go ahead and keep the deviation in the time frame to a day, and go ahead and click that and apply. So there is VWAP. So my target actually for a lot of trades, my first TP will be VWAP, then my second TP will be anything to do with market structure. So this high right here would have been my next TP, and so on and so forth. So there y'all have it. You have learned my entire strategy, and obviously there's a lot more to it. So if you want the free course, make sure you check it out. Plus go look at my YouTube channel where I offer a bunch of other educational resources on different topics. But if y'all enjoyed the video, make sure to leave a like and subscribe, and I'll see you on the next one.